Hello and good evening, everybody. You are back with the crew, and this evening we have a couple of guests, as you can see, and I'm really excited about tonight's show because we have some people that have been in the IBC and they can help us with all those questions that you've got. Please send me questions. I've got 10 questions here, so hopefully this is going to be able to get to all of these. But gentlemen, how are we doing tonight? Simon, how are you, sir? Other than your phone ringing, how you?
Let me mute that thing. Things are going crazy
okay.
over here.
No, perfect.
Life is good. Life is good. I got my my creative mind in high gear right now with my banking system. I really do. It's starting to become a problem when I'm driving. I'm not staring off into space. I'm thinking about 10 to 15 years ahead and how am I going to get there in all the different routes. But life is good, brother. Life is good.
Good deal. Love to hear it. Sir, I don't know you as Legacy Vision, but I love it. It makes sense to me. JV, how are you tonight, sir?
Sir, I'm doing great. Hailing from Tennessee, out here in the mountains. I'll be heading back to Alabama tomorrow. But it's good to be on with you guys tonight.
Yeah.
Well, it's tonight for me. It may be daylight for you guys.
Well, it is. Technically. It is. Yeah, sure. It's after 5, so you can drink. You can call it night.
5 o'clock somewhere. Yeah, 5 o'clock somewhere.
Yeah.
Right.
I just had two different people text me and say, "Oh, I can't get into the live stream for some reason." I'm like, no, I'm pretty sure it's live and we're good to go.
Let me.
It says I have 9 people in here, so I know it's live. Okay, gentlemen, I'm going to ask a couple of real hard-hitting questions. I'm not going to hit you with the one that Elizabeth and I really want to answer, but we'll do that privately, JV. but
hey, no gatekeeping, man.
Well, yeah, true. Okay. I have 2 questions, simple questions, but it's the same question. Who could benefit from one of these IBC policies? And is there what you would call a minimum individual as far as, well, I'll just let you guys go on that. Could everybody benefit from this, or is this something that just only a specific person? And maybe you could let everybody in the chat here understand who that person might be and how they would fit into an IBC policy.
Go ahead.
Either one.
Is that me first?
Yeah, you go first. Let's hear your take on this.
You got JV.
Well, I sort of view IBC in a different light after been doing it for a while. And like Simon was saying, sort of rethinking your thinking. But one thing I would say is you have to have discipline to save. We're paying ourselves first. Without the discipline, you can't make this happen. Now, a minimum, when I think of that, and that gets tossed around a lot. A lot of people say, well, whatever your age is plus a 0 each month, if you're 55, 550 a month, that kind of thing. But I'm beyond looking at it like that. If you're putting money in someone else's bank and not in your bank, that's the size policy you need. If you find yourself, if you don't go, if you own your own grocery store, as Nelson pointed out, you don't go to the competition to buy your groceries. So, if you find yourself in a position where you're putting money in someone else's bank and they're going to use that to make a profit for them, then, but that's just the way I view it. But a lot of people have to start off wherever they are. But I believe anyone can benefit once they see that, saving for themselves and building their own wealth is much more advantageous than building wealth for someone else. I mean, They pretty much got us in that system where they want to control your money. Give it to them, they'll make a profit and try to keep you out of it. Even like 401k. When you borrow from a 401k, are you interrupting the compounding? Oh, who's got control over the way you pay those loans back? But that's just my view in a nutshell.
Yeah. Okay, that makes. So let me sum that answer up a little bit. There really isn't anybody, as long as you have the will and the desire and the ability to be disciplined. So almost any income level, right? Yeah.
Yep.
Well, that desire is the key word.
Yeah, that's right. Okay.
Yeah, absolutely. Absolutely.
What would you add to that, Simon? What have you got for us?
My answer was going to be desire because just my own personal experience. If I look back at my financial track record, I can point out years of not giving any type of effort or thought to saving for any type of reason, right? Money in, money out. For the good stuff and the unnecessary stuff, we've all been there in some capacity. It's the desire to improve the quality of your life, the desire to get rid of the stress that you're in or the situations that you're in, that desire, that fight or flight mode. You must have that, because when you have that, you're willing to do whatever it takes and then some, right? And so it might be viewed as a bad thing in that moment, but when you see a life raft, you're ready to drop everything you got to swim over to that life raft. And for a lot of people in there, in this world that we live in, at any economic level, if you're ready to drop your stuff and go swim towards the life raft, that's it. Just keep swimming. Just keep swimming. Desire is key.
It's probably one of the best, if not the best, exit plan I've ever seen. It's brilliant. It really is. The more I learn about it, the more I love it. Yeah. And what a brilliant mind to come up with just a lifetime, our Nelson Nash, the way he did everything and the way he taught it. And it was just something that all you need to do is watch 20 minutes of that man speak. And you're like, I want to be that guy. I want to be with that guy. I want to be part of what that guy's about. That's what I want to do. Yeah, that's my life right there. Yeah. Isn't it? It's not strange. It's not falling on deaf ears in this group, I know, but isn't it interesting that men like him don't get Nobel Peace Prizes? It's sad, but that man, what he could, if you could have went mainstream with that, like, anyway, don't get me all wound up.
That was just the first question. We're already going off track.
So would you say that I'm going to follow up with that one just a little bit. So a big thing that I concern myself with is a lot of people want to get rich now. And a lot of people in crypto are like, well, I want my Lamborghini. And they don't necessarily want to be as diligent. However, on the other side of the coin is they put a lot of time and a lot of effort and a lot of research into figuring out what this thing is. They have to, because so many people have told them that you're just buying whatever you're buying, tokens. They're not even real money. You're not even buying anything real. So I guess this one's more for you, JV, but have you experienced people get into this and then it's, well, I thought I was going to do better quicker and then get out? Have you heard about a lot of those people? Or what do you think?
No, I'm sure that there's a lot of those out there. I don't really do it like that because I don't want to set someone up that doesn't know what's going on.
Mhm.
You know,
Mhm.
I have found that with a lot of studying and learning, once the light bulb goes off as to exactly what they're doing, and they make
Yeah.
it a part of their overall path, their plan. You know, if you don't have a plan in life, it doesn't matter what road you go. You know, you can take any path that you want. You know, but
That's right.
as far as making a plan, you know, a lot of authorized practitioners don't want to work with people in debt. And why? It's because they don't feel that people in debt are disciplined. Well, you
Mhm.
know, they just may lack desire. Simon made a good example, you know, back in hit, you know, where, you know, they just see the bill, they just pay it, they just move on, you know.
Yep.
Yeah.
But once you learn how to turn debts into uh, assets,
Yes. Mhm.
um, you know, and build a machine. And when I say a machine, I'm talking about, you know, a system of policies, not just one. You know, everybody talks about being diversified. Well, you know, can
Yeah.
diversify through multiple lives, multiple insurance companies if you wanted to. Um,
Yeah.
but that's what I think. It's a desire thing, and you know that mentality of getting rich quick instead of building wealth,
Mhm.
whatever it takes over time, turning all these liabilities into assets. That's the key to it. I feel like a good mindset.
It's just so magical. I just every time I wrap my head around borrowing borrowing the money and then paying the
It's
money back, and then you got the deed or the pink slip in your hand and you got the money back, and it's like that whole circle of that wonderful story that's told always about the $100 bill, and he drove into town and it went to all the different merchants and it came back
right,
to him. You know,
right.
that's hundreds of dollars of velocity of money that
Yeah,
happens in every community that you could trace if you could just put, radioactive bill or something, and you could follow it around town. It would stay in that community forever.
You
And
know,
that
Alan,
could be you.
that would be interesting to see here in the next 5 years, a local town, to see how many cryptocurrency coins stay in a
Mm,
certain town and how long they're
yeah,
there before they actually, go somewhere else out of the,
go
out of
global.
that county
Yeah,
or the state that they're in or whatever providence or ever, jurisdiction you're in. That would be interesting to see.
yeah, it would be. That's kind of it'd be pretty easy to trace too one day. I'm pretty
Hmm.
sure.
Hmm.
Okay, let's get on to the really serious questions now. No, I'm kidding. Well, I already did the follow up. So, um, we kind of covered this a little bit last week, but this is kind of the questions that really resonate with me. I know because I've been through it now, but how long does this? Okay, somebody wants to call you up this week, JB, and they say, "Listen, I heard you on that show the other night, and this is just right up my alley, and I think I'm disciplined, and I think I'm the person for this, and sir, I want to work with you, and you sound like an honest individual, and I appreciate your time. And how long is this process going to take me?"
well, I like to say 4 to 6 weeks on average. You know, if you're young and healthy, you know, they may not require a medical or anything, you know, children, for instance, you know, that kind of thing. But if you're older and, you know, they want to check that medical record, they don't want you, you know, signing into a contract and then falling out the next day. Um, you know, it's all about risk. You know, the whole
Yeah,
thing
yeah,
is about risk, and they can be a little, um, you know, they're strict, but you know, we are basically part owner in the. I mean, we want them to be strict. We don't want them. You know, we sharing the dividends, the profits from.
that's right.
Uh, you know, we want them to sell as much IUL and term and everything that they want to sell. I don't want any IUL, but you know,
No,
but I mean it on that side. You know, since I'm a policy owner, I get paid dividends based off the profit of the company and uh,
yeah,
you know, that kind of thing. So
and not to get too deep into that answer, but that let's say you had $1 million policy, right? And if you passed away in the first 6 months, the $1 million would pay out. Whereas if you're
Absolutely.
a client for 20 years, they could get that back. It's so that's what their risk is. That's why they have to do all the medical on you and all the rest of it, because like you said, it's a calculation. Yeah.
Mm-hmm.
Right. They want to use the premiums that you pay to make a profit over time. They loan money to banks, and they have real estate investments and mortgages and that kind of thing. So they're making money with the premium. And that's
So at the end of let's call it 6 weeks. At the end of 6 weeks, what do I have? What do I have now in my hand? What am I doing here?
Well, my goal is for you to have a contract that the insurance company can't get out of, that gives you the right to pull all the levers, and no one else has a right to do anything except for you and the man in the mirror. As long as you pay your premiums, there's no wiggle. That's the problem with IUL, and you'll hear that kind of thing out on the internet. Those are a lot that's tied to a stock market, a lot that's got annually renewable term. I know we may not want to get that detailed in it, but you want to be careful what you get. We get older every year. The price of insurance in term, for instance, goes up every year. If you don't want to get trapped to the point where the insurance company can call the shots and say, oh, well, you got diagnosed for X, Y, Z, and now your term is going to cost you, $14,000 this year. That's not the plan. That's not what we, we want a structured payment. It's always the same. We know exactly what the terms of the contract is. And this whole world is run off contracts. See, a lot of people say, well, why do you trust the insurance companies? I'm like, well, why do you trust the banks? Go down there, you'll sign a contract with them. You give them the money. They're making money off of your money. They don't owe you anything, basically. If they lose your money, they can lock it up. COVID was a good example of that.
That's right.
To where you may go down there and not be able to get your money. Could that happen with an insurance company? Well, maybe, but we're talking about 150 years of them paying dividends, them paying death benefits, and no one's lost any money yet.
No.
So,
and they went through 2008, and they went through COVID, and they were profitable. So,
and they went through 1930.
Yeah, absolutely.
Okay, I mean, they've been through a few of these
been there and back.
social global snafus that keep coming around. They've been through
and paid dividends. That's right.
Okay, so
check might have been late, but the check showed up.
So 6 weeks later, I've got a contract, and this contract allows me to do what? What is it? I know it makes sense, but what are we going to do with it? How's that going to improve my life? Simple question, but complicated.
I would like to say that first off, if anything happens to you at that moment in time, your family's taken care of. That they're going to get a windfall just right on time. Now, I know that we're not looking at it as death benefit. That's not what we're viewing. We use it as a bank, so we can deposit money in there and watch it compound, and we borrow against it and then pay it back. And that's the mindset that people have. We were talking about how people are. They don't view a cost of capital. They know it when they go down to the bank to borrow money, but when they borrow from themselves, pay yourself first. That's what a premium payment is. A deposit into your bank. You're paying yourself first. Pay yourself back if you borrow the money with interest. Those are the principles to be like a bank. I mean, that's what makes it so simple in a lot of ways. You just have to think like a bank, be like a bank. Bank doesn't lose principal. If any members of the bank or employees of the bank, if they borrow money, they're paying it back with interest.
Yeah. Nice. That's
I'd like
a
to
nice
add to
little. I love that little benefit right there. Those are my two favorite things. If you take a quick exit, everybody around you is pretty happy about that. Not happy that you're gone.
Oh no, they're happy.
Well, maybe in my case, maybe only in my wife's case, but yeah. But oops.
Well,
sorry about that, guys.
on the other side of that too is, even though we're not using or viewing the death benefit like somebody out on the street, if you went up and talked about life insurance, they freak out because they're thinking, oh, death benefit, this is something I won't ever be able to use until I pass away. They don't understand how they could use it during their life. But, you do want a high death benefit. That cash value has to match in the U.S. It has to match the death benefit at age 121. In Canada, it's 100. So the higher that amount is, especially in your later years, the more your death benefit, your cash value is making leaps and bounds to try to catch this death benefit, because we reinvest the dividends in buying more death benefit. These are, we call them paid up additions. I'm trying not to be too complicated. I'm trying to make it
it's
simple.
good. It's good.
No, it's very good explanation of it too. Yeah.
But it has to match. So when you're in your 70s, 80s, and 90s, when you pay your base payment, say, $5,000, your cash value is $15,000, $20,000 for that year.
Yeah.
So do you want to be stuck paying a $500 base payment a year?
Yeah.
And making $1,500, or do you want to, so it's just the way you view these things. People don't understand the time value of money. If I got a guaranteed contract from an insurance company where they're going to pay me, there's a guaranteed paid out of, say, $2 million. What is that worth today? If I come to you on a piece of paper, hey, I'm going to give you rights to get my death benefit whenever I pass, what will you give me for it today? Well, it doesn't matter what we agree on. The next day it's worth more. And the next day it's worth more, because every day that passes, it's an asset that grows on its own. It's not dependent on the market. It's not dependent on Wall Street or real estate or anything. It's just time. It's just the older you get, the faster it has to grow. That's
one of my favorite things. Okay, we got OG here in the house. Hey, OG, how's it going tonight? Thanks for showing up. He's a young man. Low 20s. He's perfect for this. And yet it's so weird. It's so weird how most of us, we never think about life insurance when we're 20 years old. But it's absolutely the perfect time for him to become his own bank. Just think the millions of dollars he could generate, or regenerate, I should say, is a better way to explain it, throughout the path of his life and his purchases and his assets the rest of his life. That's
why we want to teach people early. He could wait. He could wait till he's 55, 60 years old. We can wait and buy crypto at the top,
Right. That's it. Yeah, same as buying crypto.
Let's get in for a much smaller amount when we're younger, especially in your 20s. If you're a grandparent, these kids, when you have a grandchild, 2 weeks old, I think it's 14 days, get a small policy on them. You could use it to as a bank until, they turn 21 or whatever. You could gift it to them, or later when you pass away, you could gift it to them. They'll have an asset that they can always use. It's about generational. If you can do what Nelson was, he was thinking long term, thinking of the next generation. The first generation that wants to pull this off for the future generation has to take the sword and you know, it'll be some work.
Yeah. Oh yeah.
But if they'll teach the next generation how to do it.
And this is stuff that my generation didn't understand. They don't know
Absolutely.
this. And in fact, I know the OG's circumstances. He's close with, I believe, his father-in-law, and his father-in-law is going to say, "Yeah, I know all about that life insurance stuff, and it's a big old scam. And I know this, and he took me for that, and all this stuff." This is not your father-in-law's life insurance. That's not what the game we're playing here. We're playing the billionaires game of insurance. And if that's what you see yourself being in the future, is somebody who can control your own finances in the future, and that's what you strive to be, not just dumb rich with crypto money, you're actually becoming your own bank. And that's really what we're after here. So
yeah,
I appreciate both of you guys just sharing all your wisdom with us tonight. That's great. Simon, what do you got on that one? You want to keep going with that one, or what are you thinking?
So, well, my mind went about 5 different directions with all that talk between you guys right there. To be quite honest, the creative mind is thinking. But let's first off, let's start with OG. Okay, just for a moment, right?
Yeah.
OG's, barely 20s, right, or somewhere in that range, right? And there's the term that we use all the time, life insurance, and that's the Main Street term. Okay, that's the thing that gets poo-pooed on. Oh, life insurance, oh, you don't need that, and it's like, you're right. I don't need protection.
No.
In fact, Nelson Nash talks about that.
Mm-hmm.
Page 3. But my need for finance throughout my whole life is vastly greater than my family needing a check on my graduation day. However, I'm glad now that I have a contract that fills up both hands equally. On my graduation day, my family will get a check, and that's good for them.
Right.
But since I'm here to build wealth. I'm here to build my little empire, if you will, of whatever that may be. And I'm going to enjoy every minute of it while I'm here. And then when I'm gone and I graduate, not only does my family get a check, but I also get to say, hey, you guys are in charge, man. Y'all be good. And here you go. So we're not after the death benefit. We're after the functions that we get to do within this contract, right? That happens to be life insurance.
Yeah.
So for someone like OG right there, right? I'm sure OG is probably setting some money aside to maybe DCA here in the crypto space. Well, how about you could do this if you got a policy. You could save your DCA, throw it into a contract. Now it's compounding right away, right? Compounding. While you're waiting for that market to dip or rise or whatever you're waiting for that opportune moment to, and you're probably watching the charts a little bit, you're going to know when it's time to take a loan against your policy to go get some more cryptos. That's just one thing. Or you're having a bad day on your way to work. You didn't check the oil, and boom, you're out of vehicle. And I know that the vehicle scenario gets thrown around a lot on the infinite banking concept topic, but we can all relate to the car having problems. And dang it, do we not have enough funds in the account to even try to get this car back to life, or we don't have enough funds to put a down payment on the car so we can keep on rolling, right? That's like it's a crucial thing. So, you just
really answered this question for him right here.
Oh, go ahead. Yeah. What advice do you guys got?
You pretty much what you just spoke about is pretty much what he just asked.
Oh, striving to be financially responsible. Advice.
Yeah.
Oh, I got a little bit on this one. First off, pay yourself first. What that means is anytime you receive money in whatever form it is in, including crypto, you take 10%, no less than 10%. You set it aside to start building your estate. Practice that. Second/third, you're going to read at least 3 books. Richest Man in Babylon, Rich Dad, Poor Dad, and Becoming Your Own Banker by R. Nelson Nash. I would in fact read the Richest Man in Babylon first, as you are practicing the pay yourself first 10% protocol. Right there, if you do the action and the reading, everything else will actually kind of fall in play, because you have the desire, as you said, you with kids striving to be financially responsible, right? So now, brother man, you have a lifeboat, right? You know, you got individuals depending on you, and you're trying to make solid moves, maybe not big moves, but moves that count and stay in place. You know, so that would be some advice there from someone who's in their mid-40s. Do that,
yes,
and you will create options for yourself in the future, and in the future of your family.
You're learning a lot. If you're into sound money and crypto right now, you're learning. It's a bigger education than you really think you're getting right now about the banking institutions and inflation and the rest of it. But those books are wisdom. Those books are things that they're little nuggets that just rub off on you, that you don't later in life, you don't realize why you made the decisions you made, but it all is because of the path which you laid down, which is the little bits of knowledge that you absorb from different things. Because if you're just hanging out with your buddies or homies at home and it's like, hey, man, nobody's talking about that kind of stuff. The only time I hear that is on the Staple Crew or some other channel. No, if you're reading these kind of books, you're becoming wise beyond your years. And then you're going to be a decade or two down your life. People are going to be looking up to you and asking you, how did you do it? How did you do that? And it goes back to the very first question that JV answered. Discipline. You have to learn monetary discipline. And that is the biggest struggle for all of us. It's our biggest struggle. You know,
the Max on it. He says, yes, sir. I read The Richest Man in Babylon. I do 10% and a 20% investing. So, brother man, on that 20% investing, I'd recommend, as a homie to homie, you take half of your 20% investing and start throwing it in a policy, a specific type, crafted. And that way, when it comes to future investing, you now have an asset that you can collateralize.
That's right.
Not interrupt the compounding bonus, pays dividends, second bonus, and you're using somebody else's money to go invest in something that you've done the research on. And then that investment, in turn, can pay back the loan that was created after you collateralized. Like, it is a beautiful play, literally for a whole life and generations after that. That right there, that 1, 2, 3.
Yeah.
Well, when you see this start happening, you become more disciplined. And OG, I like to give you some advice not to listen to the world. Think, create a mindset of yourself to where you're studying on your own. Does it make sense to get in a 401k? Well, maybe it does. But if you're going to grow tax revenue in the future for Uncle Sugar or whoever you want to call him these days, there's a difference between investing and saving. Don't let anyone tell you, oh, put your money over here. You're saving for the future. Put your money over there. You're saving for the future. Um, the word investment means it has risk. If it has risk, it's an investment.
That's right.
Saving does not have a risk. So just in your mind, just say, hey, there's a difference between these two, and be careful trying to use an investment to save. The way we use IBC is we fund our policy, we put it in our bank, then we take a loan from there to do whatever investments we want to do. So we put the money through our bank first before it goes to anyone.
Nice.
Now you can start with a 10% rule, you can start with a 20% rule, but the more advanced you get, I don't want to freak you out, but if you're putting money in someone else's bank, that's the key. When you see yourself putting money in somebody else's bank and you've got a bank, just sort that out in your head and you'll come up with your own decision on what you think you need to do for your family, because the kids need shoes. There's always going to be something around the corner that's going to take your money from you. So you have to trap yourself to the 10%, preferably 20% if you can get there. Keep your debts paid. There's a way to take the principle, let's take a credit card, for instance. I'm just going to throw this out there just in case anybody out there is wondering. They are people that they're maxed out on credit cards, and they're paying these minimum payments on these cards. They're trying to stay ahead, but yet they think that they're staying ahead because they may be saving while they're spending all this interest on the car. So be careful. Are you really saving if you're spending the same amount of money in this debt over here? There was a lady one time that was working. She thought she was saving money, but she had enough money to pay off a debt, but she was really working for nothing because of the cost of her debt. But in a
company,
right? Yeah. In a credit card payment, for instance, there's a principal amount and interest amount. Even though it's a minimum payment, part of that's principal, part of that's interest. Well, if you're not planning on paying that card off because you can't or whatever, you're just making the minimum, at least take that principal amount and put that on a bill. Let's say it's a $300 card and the principal amount's $100. You've been paying $200 interest. The total minimum payment is $300.
Yeah.
If you got a phone bill that's $95, I'd run that phone bill on that card every month. And the $95 that you were taking out of your account needs to go towards the target debt that you're trying to get rid of. Because if you don't, you sort of have to view all this in a picture of turning these debts into assets. Yep. And I know that sounds crazy, but you can.
No, it doesn't anymore. Used to. Yeah.
Right.
Yeah.
I just want to throw that out there to, get people thinking, get them thinking about their debt, what they're doing. Do you want a mortgage? If you go into a bank and ask for a HELOC, that's a second lien position. What we call a second lien mortgage. You're paying the regular mortgage payment, and then you're paying a additional on this amount that they give you in this line of credit. I'm not saying that it's a bad thing. I mean, people can do that and pay off all their debt and sort of work their way out of a hole like that.
Yeah.
I just want to mention there is such thing as a first lien position HELOC, where they put the entire line of credit, they pay it off, it's there. Yeah. And if you use what I call paycheck parking, I know I'm saying some stuff that people may not understand. But
I was talking about this last week, actually. But yeah.
If you dump your whole paycheck into a line of credit, that saves you interest. Now, Dave Ramsey and a lot of those would say, hey, save up 6 months, save up 3 months, and that's fine. But if it's going to take you 5 years to save up a year's worth of, what are we doing? Well, I mean, what are you going to pay in interest on that debt for 5 years? If you free up some room on a credit card, that can fix a tire. As long as you got a process that you're going to run through and you're going to knock these out and stay disciplined and don't let somebody distract you.
Dave Ramsey's strategy worked in a different era. It surely did. And the ratios are completely different than they ever used to be. And your wage is not kept up with your expenses to the degree that there's absolutely no way that his plan works unless you make a lot of money and you live in a rat hole for a long time. That's not. That's. I'm sorry.
Yeah,
that's not
eating noodles and doing without rice and beans one week and beans and rice the next week. I mean,
that doesn't work.
Who can live? Yeah, I mean, somebody can live like that short term, but long term, these strategies that we're talking about tonight are long term, life changing, wealth growing strategies. These are not, 1 week you're going to do this and then the next week you're going. I mean, it's sustainable. That's the main difference. It's sustainable over a long period of time. Not to where you just can't do it. It's sort of like trying to stay off of sugar for more than 2 weeks. You're going to have to do some changing if you're going to stay off sugar for any period of time.
Yeah, better not be the holidays. That's right. So,
don't start that in December.
Or Thanksgiving for that matter. Yeah. Okay. I like this one from Luke, and I know we have kind of bad news for him on this answer. I would anyway. But what do you guys think of this question right here? I'm waiting to bulk fund a policy when the profits are taken this bull run. Start your bank and let it grow. Take loans out in assets that appreciate. He's got everything except for the first sentence, in my opinion, is a good call.
So I'm going to ask, why wait? That's it. Why are you waiting? I want to understand his viewpoint before I continue on with the rest.
There's another issue too. They're not, if you have a windfall of $1 million next week, you're not going to be able to get a policy for $1 million. You're just not, because especially if you're, making 40 grand a year right now, it's just that you're not insurable to that degree to them. They don't understand where you got the windfall from. You have to show an income level and a base income. They're not going to just go, oh yeah, hey, he's good for it.
You can't do this.
Yeah, that's right.
Yeah.
But there are ways around it, as we know, multiple policies and some different things. So it's not a game changer, but I thought it was a really good question though, Luke. And I think you're getting the hang of this just by the look of that question.
I get the reason. My reason for my knee-jerk reaction to wait is because I don't have it today. I'm feeling, my words, I'm feeling stuck, or I might be trapped or committed to my current situation. Okay.
Yeah.
So I like the plan. That's an easy play. I'm in profit. Take it, run with the ball. Good idea. The problem with that is you're waiting for other things to happen, which means you're missing out on the compounding of interest.
Yes.
And you're also giving your money away, which equals a loss of opportunity cost. You lost the opportunity to do something else, right? You put it over here. You have initially taken the action to sandbag some opportunities later, because I'll tell you what, this is how my world works. Either I have the money and I don't got the time, or I got the time and I don't got the money. That's just how my life works, right? So
our lives,
not anymore. Not anymore. Woo-hoo, game changer for me. Yeah. So, I get wanting to wait. And that's okay, but you are missing those things, and so you're gonna have to make that decision of, is it really worth it to wait to start this process? I mean,
I don't think it is.
No, I don't think it's
No.
I definitely now I don't think that's a beneficial idea because as JV mentioned earlier, we get older with every day.
Yeah.
That means things change, right? And we're talking about a contract. And so once we get things locked in on a contract in the world we live in, that's pretty much gospel.
Now you're the bank.
No, yeah, now you're the bank. You're the bank today.
Now you're
It might be a small, tiny little thing, next to the Circle K or the 7-Eleven, right? But you're in. You're starting. You're learning. You're a mustard seed, and that's all it takes.
That's right. Love it. Great point.
I like to mention too, that Nelson, he got a policy, and he had real estate that he was planning on selling in the future. Now that ended up not selling for 10 years. So he was just running money through, in other words, taking a loan, so he owed a fairly large loan payment back to his bank. But he had in his mind, hey, one day I'm going to sell that real estate. And then when he sold that real estate, he had a place for that windfall. But as long as you're disciplined where you have a plan to pay it back, I'm not saying you got to pay it back next week. You just have a plan. I mean, if you don't have a plan, they're just going to take it out of the death benefit when you pass. But you would have more liquidity, more options. If you have capital around, every time I find a good deal, I never had the cash. Every time I had plenty of cash, I couldn't find a deal nowhere. It's because it's the way the system works. When you have extra cash, everybody has extra cash. So they don't want to sell their property to you cheap.
No.
When you don't have cash, they don't have cash. No. So that's when they want to sell their property really, really cheap. So it's just these cycles that we go through. But Luke, I would say, man, just keep studying, keep thinking about it, toss these things around in your head. IBC is all I study. Now, I'll be honest, I drive, 12, 14 hours a day. This is all I do. This is all I listen to, because now that I found out that there's things about money that I never knew, I can't help but just, what else do I not know? What else do I not know? And the further you go, the more you learn, the more fired up you get. Hey, is it for everybody? Yes, it's for everybody who wants. But if you want to stay in Egypt, it may not be for you. Or for those that may not know, if you don't have a desire, then it may not be for you.
Valid.
True. Yeah. That goes back to our first question tonight. Yeah. If you don't have the discipline, and if you don't have it, like you keep saying time and time again, and if you don't have a game plan, the hardest part about climbing a mountain is a game plan. I mean, it's really the hardest part. And everybody because they'll just, like you said earlier tonight, I'll find something else to do. I'll just, time will get consumed. I'll just stare at my phone all day instead of making the steps to change my life. Yeah.
Can I answer this question that Paul has up here, or attempt to throw something in? And I'm trying to get out of debt, learning to be disciplined. Should I wait until I'm out of debt completely before I get this type of insurance? You can throw extra money at a debt, and you can pay it off. I mean, if you want a debt paid off, just pay twice the payment. But if you can build an asset in the background, it will take you a little bit longer to pay off the debt, because you may be building something and moving money through. But in the end, when your debt is paid off, you just turn that debt into an asset. It's basically, your equity is in your insurance policy. And I know we keep talking about insurance, but I don't want to take away from Nelson. Infinite banking is not about insurance.
No,
it's about the process of building a stack, borrowing from the stack, realizing that we finance everything we buy, whether you pay cash or whether you go down here and get a loan. If you pay cash, you're giving up interest that you could make. So just think about your lifetime. You know, you made 50,000 a year for 10 years, and you just went out there and you spent it all in cash, all in debt. Well, you know, you've lost the compounding that could have made. You know, I don't want to sit here and it's in the millions, just over 40 years. I mean, it's in the millions. We're talking about, but it's because we didn't know.
Yeah,
we don't realize the cost of money.
You're either paying interest or earning interest in life.
Right.
You can do
and I'd like to also say that saving interest is making interest.
Amen to that.
Hey, if they
amen to that. Yes, sir. Yes, sir. That's a man. Yeah, amen to that. Go ahead. Sorry.
No. Y'all go ahead. I probably spilled out enough. Paul just got me fired up.
Brother man, I'd like to piggyback on this question too.
Okay.
You know, let's dive a little bit deeper into Paul just for a moment. I think this can really benefit all, right? And I'm going to read the question again. This is great info. Thank you. Question. I am in the getting out of debt, learning to be disciplined. So Paul's getting out of debt. He's working it, right? So
yeah, he is making it happen.
And then he asked the questions: should I wait until I'm out of debt completely before I start this? So let's just take what we learned from JV over here.
Yeah.
Right. And that is, if all of our money is going to the debt and the interest, right, which is good. We're knocking down that debt, right? That's a good principle to have, especially as a borrower, right? We want to have that we want to have that practice in play. But what's going on there is money's going to interest over here to somebody else.
Yeah.
Okay. So is there a way, Paul, for you to look at this as and I'm reiterating a little bit what JV talked about, where can you take that freed up money, okay, not totally paid off, just, hey man, that I've paid down that principal, that means a little less money goes to interest for that debt. Okay, so since we've saved money there, as in we don't have to pay it, that means it's freed up to do whatever we want. And so you're really going to try to take a look at that right there. How much money is going or being applied to the interest on your debts? Okay, because that's what you're really going to be able to free up when you're paying down your debts. And now you can pivot that money and put it over into a specific type of whole life insurance policy contract. Okay.
Yeah.
And now you're feeling good about taking care of your obligations. But now you're really feeling good because you have your own asset, like the institution that you're paying has. Right. Your debt is their asset. Like they're, pay us, man. Oh, you want to do payments for 10 years? Oh, man, we would love that to happen. Yeah. Of course you would, right? Okay. Yeah. So, as they say, don't hate the player, hate the game. Take a page out of their book. Do what they're doing. Take that money and whatever it is, see if you're able to do a policy. And if you're not, then I would say take that money anyways and build it up on the side so you can watch that grow physically right there in your home. And you're like, you know what, this is really working. I'm knocking down debts. I'm freeing up this cash, and I'm going to pull the trigger on a whole life insurance policy. This is going to be great, man. Oh, I'm so happy that I'm doing this. Like when you're paying off your debts and knocking down your debts, and I'll speak to my own personal experience, man, it feels good. It really feels good when you're on track and you're being disciplined, man. There's nothing better in that motion. But if you can do that and then also incorporate this other discipline of building as opposed
Building
to
on
getting
top
rid
of
of, right?
Yeah.
Just like that movie Aladdin. It's a whole new world.
There you go. Yeah.
I like what you said, Simon. That part about it makes you feel good where you start seeing a path out of the wilderness that you hadn't seen before because you didn't think it existed. You just thought it was going. And I'm not going to say you need rice and beans every night. That's not what this is about. There are ways to just. There's a way to do it to where you're basically spending the same money that you're spending every month.
Yeah.
Yeah,
That's right.
It just takes some insight and some depth digging. We'll just call it that.
I have to tell a fun little story that really applies right here. Back in the 90s, I know, way back in the dinosaur days.
Whoa, easy on the dinosaur days there, dude.
Yeah.
I'm running a gun and doing my thing. 90s.
I can remember every month my wife said, oh my God, I can't believe we're writing these $1,100 mortgage payments. And I was thinking to myself, you don't get it. And she's like, well, what do you mean? I go, I look forward to making that payment. You know why? She's like, well, no, I don't get it. I'm like, well, let's divide what the house is worth. And the thing is going up 15% a year. 15% of a $500,000 house is a lot of money per month. That's a whole lot more money than the $1,100 that we just wrote. We made money on $1,100 payment. Well, now I used to call that free money. That was just free, easy money. Okay. Can you imagine now, had I known what this is all about, I could have kept the 1,100 and gone up with the value of the homes increasing at the crazy rates that they were back in the late 90s. That to me is such a win-win that it's magic money. It's like, oh, I got the deed and I got the money. Like, wow, is that legal? Well, that's what the banks do. The bank has the deed and you give them the money. Right? I mean, it's crazy to believe that's how they will live, but that's how they live and work. It's good stuff. I've got to hit this because this is okay. Everybody loves their own books, right? And I understand. Okay. But the book that changed my life, and I've read it 3 times in my life now, was Think and Grow Rich. And
that's a big book too.
When you understand, the first time I read the book, I thought the book was just about math. And I thought the book was just about business and how to be a businessman. And then the second time I read the book, I thought, well, this guy's talking to me spiritually. Yeah. And then when I was a little older, man, and I read it the third time, I said, this whole book is about what's in your head. This whole book is not about working harder and getting out there and banging on the streets and knocking on every single door and trying to make $1 every second of your life. The book is not about that, but that's what I read the first time I read it. The third time I read it, it's what do you believe is going to happen good to you next week? That's what I got from the book. And what's between your ears? Is between your ears good energy, good light? Do you believe you're doing good things in your life for other people and for yourself? How can you not prosper when that happens to you? That's what I got from that book. And that book, I can't even remember who put it down here and said that was their favorite book. And it truly, financially, that's my favorite book. And I've just got one other thing to say about that book. I'm in the process of writing a book like it. I haven't talked about this too much live to other people. In my head, I've got the chapters laid out, but it's a much more spiritual book than the one he wrote. But maybe not, because that book is very spiritual. So,
it is.
Anyway,
It very is.
Yeah.
OG Mac, OG Mac's got a good question there in regards to just the breakdown of the. He says, OG Mac says, break that down. How do you save interest?
Okay.
So OG Mac is yeah, that one right there. I'll try to do my best on this one. You gentlemen, fine gentlemen, jump in. So OG Mac, let's say you got a loan, $1,000 loan, okay, 10% interest. So your first month is you owe $100 in interest, okay, and so you make your payment of, let's say, $110 for that first month. Okay, this is what's set up on your terms. You have a monthly payment of $110 for X amount of months or X amount of years. Here's how this works: $110 to the loan, $100 went to interest, $10 went to your principal. So now you owe $990 from your loan, and then now that calculates the interest rate of 10% for your next month's payment is calculated onto that. Okay, so your amount of money that went to interest month number 2 is going to be $99, while you took another $10 and it went to the principal. When we're talking about, or when it's talked about, anybody that's talking about this is the save. How do you save on interest? It's if you knock down your principal, all right, that now month number 2, you owe $990. If you knock that down to $800 on month number 3, your loan went down. That's a good thing. But the amount of money you spent that was applied to interest is now less, far less. And you can keep on doing that. So that money that you saved, that $20 on month 3 that you saved, right, you didn't have to pay, can now be applied to another area within your life. Us gentlemen here are saying throw that in the, throw that into the policy would be the first move. If you're in that paying off all my debts type of situation, that's the best way I can describe it. JV or Alan, you want to throw some extras on that?
Go ahead, JV. I've got a different twist on that ankle, but yeah, go ahead.
Well, I just wanted to cover a different, if we're talking about an amortized loan, if you throw an extra payment on your car note, it's not going to reduce your payment next month. But lines of credit, what I mean by HELOCs, credit cards, those are the high interest.
Yeah.
Those, if you make a payment to those, you're instantly going to save interest on the next month. If you look at your bill, your interest payment will be lower. Now, I would recommend just paying the same payment that you've been paying, unless you're doing some kind of target in it. And, that's the kind of stuff that I love to do is picking a debt to target. There's certain ways, I wouldn't do the, a lot of the snowball, that kind of thing. I like the cash flow index. If you don't know what that is, you can look up and just type cash flow index, and it'll show you how to calculate that for your bills. But I like all the lines of credit first. The only other way I could tell you how to save interest is, if you're talking about an amortize, is to build up a stack big enough to where you can take the money and pay it off. Are you saving interest? Maybe, maybe not, because no, you're not saving interest, because you're going to start paying that interest back to your bank. When you start paying your bank the interest, if you keep the payments the same, it don't burn as much. It don't cause you to do the rice and beans and rice method. It's the same money that you're paying all the time, but it's the way you direct the flow is what
that's a great point. Not all loans are equal.
Right.
There's another speaking of that leads me. It's not interest based, but it's principal based, in the sense that, let's say you've got a minimum payment of something that only has it's $150 a month minimum payment, but it only has $500 or $1,000 left on it. Well, often it's really nice just to go ahead and knock that whole thing out, because it has freed up $150 a month of principal. That's not, maybe it's a low interest and you've only got $1,000 left to pay on it. But if you can knock that $1,000 out, that's a whole $150 you can put towards a different payment altogether. So all of that is the kind of stuff. And I'm going to answer two questions with one, because Greg's next question was, what company is good to work with to kick off the policy in infinite banking? What I'm about to say is every Nelson Nash Institute practitioner, I'm going to call them, that uses that education that Nelson put in that book on a day-to-day basis, and as part of teaching that discipline, if you will, all of those people are going to work hand in hand with you. You're going to show them every bill you pay, and you're going to game plan together. They're not going to say, oh, I'm going to tell you exactly which one you should pay off first. They're going to say, this is your 5 bills. And they're going to say, well, here's why this one makes sense. Here's why paying that one off makes sense. Here's why this could add up to be a lot more money in your pocket every month like this. You could get further ahead by paying the student loan instead of another loan. Just for instance, you don't know I'm not going into specifics. So my answer to that is, I would not recommend anybody in IBC, and I wouldn't buy a policy from anyone out there who sells life insurance unless they were part of the Nelson Nash Institute. So that's where I'm at. That's what I believe in. That's the people I've been working with. And I've found all of them at this point to be very honest folks. And that's all I care about, is honesty at this point in the world we live in today.
Yeah, and that's the group. I'm sorry, that's the group that I'm sort of with. I'm located a little south of Birmingham. That's where Nelson lives. Are you guys? Well, you may not be talking about that yet. So
not yet. But we're gonna pop a cherry tonight.
But I work with a couple of different groups. One based out of Birmingham. They're all off the rise, and then there's another group for 2 different life insurance companies. Because my goal is when a client is asking me, what's the best policy for me, I don't want to lynch on one particular insurance company. We want to shop around. We want to get the best deal for the client. So
that's right.
I believe that's the way it needs to be. That's that really, question.
That's that question I was going to next. And I think we both kind of answered that pretty well. It's not about the companies. It's about going to somebody and they find the policies that work best for your particular financial situation, because they all have different deals. But there's 3 or 4 that I know you work with, right, JV, that they're going to be able to cover just about everybody under that group, right?
Yeah, unless they're just really, got some major health issues. But, even then, do you have a daughter you could put it on? Do you have a wife you could get a policy on? Right. If you're wanting to use it for banking, it really just depends on how you want to use it. But you'll look out there and they'll have what they call these skinny-based policies, these 1090s, that kind of thing. Well, when I got my first policy, that's what I got stuck with, because I didn't know, I didn't understand. And that's the whole reason I wanted to learn, hey, how do I set up these banking contracts the correct way? What was happening is I was working on a family trust for my family, and I stumbled over Nelson on YouTube. And I started studying, and it took a while for the light bulb to go off because of the things that he taught. And I was like, I cannot believe he's been teaching this in Birmingham, 30 miles from my home for 20 years, and I'm just now learning about this. I should have been on this boat, 20 years ago. Well, I called the Nelson Nash Institute. Well, at first I reached out and I got a policy from a company who has those three letters in their name. That's all I'm gonna say there. And oh yeah, this is what you need. Well,
Yeah.
come find out, it's not that I can't use it for banking. It's that it's got a few problems with it. You know, here's an example. This is why you want to work with someone that knows, that understands this. The insurance company thinks you're only worth so much money. Unfortunately, I know we all think we're worth a lot, but they think you're worth X amount. It's based on what your income, as Alan was saying, what they think your company's going to be out of if something happens to you. Well,
Right.
you know, if they say, you know, you're worth $500,000 and you just so happen to have a large term on your policy to where you
Yeah.
can stuff money in, so the IRS is not saying, hey, you're going to be taxed for that. You know, the whole thing is to stay what we call, we don't want it to become a MEC because it's taxed different. So we're trying to keep it tax free. Well, the only way to do that with a skinny base, a low base, and you're trying to stuff a bunch of cash in it, is you've got to increase the death benefits to such a large amount to where you
Yeah.
can do this. Well, that large death benefit, first of all, it's a term. It's going to fall off. You're spending expense for something. I mean, it'd be great if, well, it may or may not be great. It'd be great if a bus takes you out tomorrow, your whole family gets $500,000. But it'd be great for the family, not necessarily great for you.
Well, I don't know. The other side's pretty good, from what I understand. But anyway,
Well,
yeah.
No taxes
but,
out there.
you see where I'm headed.
Yeah.
If you're not careful, you'll get into a situation where you want to go get another policy. So you already got a
that's
$500,000 on you. We can't give you know, you're not worth.
You're not
you know, you're
insurable
not
to
worth.
that.
Yeah. We can't do that. But then you're sort of stuck to where you can't get another policy. And the one that you got is going to fall off in, say, 10 years when you're older. And when you do try to get one, well, you know what happens when you try to get insurance when you're older. So there's a lot of little things that's related to insurance that really don't have nothing to do with infinite banking.
Yep.
You know, but when I called the Nelson Nash Institute, hey, you know, I got messed up on this policy that I got. I want to come to the Nelson Nash think tank because I want to learn how to do these policies. I want to be around people. Well, I got told right quick, son, you got to have your insurance license to do that. You got to be a financial licensed professional. Well, you know, that sort of hit me in the gut. I was like, well, so I went and got my insurance license. You know, because I wanted to be able to go to these, get around these people that understand how to build these banking contracts the correct way, because I plan to do a lot more for my family with the family trust. But that's how I sort of got stuck, not like an insurance, sort of got stuck, you know, being an insurance, a life agent, when really all I wanted to do is become an expert in setting up these banking contracts.
Yeah. That's a great story, how you came all the way full circle on that whole thing. It's interesting too, because I'm actually working with some people, and we're going to work with some trusts going forward. But I highly recommend getting this going before getting a trust. You could do it either way, but I do believe that you need to understand discipline of money, and this is going to help you do that better than anything else will. Yeah. Paul had a great answer, Oak had a great answer to Paul's question. Did you read that, Simon? That was good. Which is exactly, here, let's put this up while I wrestle my dog. Okay, go ahead and read that one, Simon, everybody.
Sure. Question part 2. Let's say XRP goes to $10 and I can pay off all of my debt with some profits left over. Should I pay off all my debts with cash or turn it into an asset like you said? If that was me, I would turn it into an asset first and then go take care of the debts.
Yep.
I am number one in my small little universe on this planet. Right?
Pay yourself first.
Pay yourself first. Amen. So take that, get the policy going, right? Then borrow against that policy. And then your debts can get taken care of on Main Street. Now, the other side of that is the debt is still theoretically outstanding, right? So now pay yourself back with interest. And you're really gonna be so happy about that. You really will. At first, you're gonna be like, "This is the dumbest thing that I'm doing here." Like you're gonna hit this wall that we all hit, right? And I can't tell you how many phone conversations JV and I have had over the course of I think we're rolling into 18 months now, actually. And man, this one we both got stuck on it. We kept tripping over this, paying ourselves back with interest. We're just like, okay, I get it, but it's still not. I'm still not excited about this. I need to see the and finally it came to me because I sat down and wrote it down on paper, and that is I'm paying myself back with interest. That means my bank, or rather my banking system, that I'm in control of, that nobody else, because their sticky little fingers in there, is making money off of me. Nobody else is making money off of me, but me. Right. Right now, I'm kind of wearing two hats there, but I would totally turn it into let your asset create another asset for you. Now you got two assets that can knock down that debt, chop, chop. And now once that debt's gone, and you paid yourself back and your bank is very happy because you made it a whole bunch of money, now it's game time. Ooh, it'll be really game time. It's really, really cool. It's really infinite in all the possibilities that you could do with this system. So that's what I would say.
And it also goes into the column of, well, I'm paying that number back quicker so that I can use that number back again. It's growing. I'm getting it back in the good account to where I can use it for the next asset or the next purchase or the next thing to pay off.
That's
and
right.
That interest is, like you just said, your own pure profit, but that profit becomes a principal pool that you can use quicker, faster, because it's gotten paid back quicker with the interest. Once you get this mentally, like I say this all the time, but reading Robert Kiyosaki's book, the second book he wrote, forgot the name of it, was brilliant too, which I like the money equation of that book a lot better. I can't remember the title of it right now, but the Rich Dad, Poor Dad was the book that I was like, okay, well, he took us all the way there and then he never told us what to do with it. Like, that was the frustrating part of that book. I was like, well, I know that's what all the billionaires do, but how? What are they using to do it? And it's like we talked about, what is the contract? You don't care. I'm not bad mouthing the death benefit. You don't care about that. You care about getting your bank account in your hands, virtually tax-free. I don't want to call it tax-free, but virtually tax-free and compounding. Why don't you want that account? Why would you not want a bank just like that? Every man would. That's why I think these policies work for everybody. Yeah.
Well, and once you get that account, you'll figure out right quick, why are you putting money in somebody else's account? So I would say, Paul, there, and I just like Simon said, build an asset, take the loan from it to pay the debt off, and then you just keep making those same payments that you were paying before, but you're paying them to your bank.
Right.
That's the only difference. You're just changing the address that's on the because you're going to get more money whether you're working or whether you're investing, whether you're, building businesses, that kind of thing, money's going to come in. But, I'm a good example. I'm up here around Gatlinburg, Tennessee. I had a business up here, and we probably, I don't know, I believe in a period of 2 years, I probably had $1 million, maybe more, just come in one hand, go right out the other. But when you think about that, isn't that what happens even if you don't have a business? If you're just working a job and you don't understand the money thing, it comes in one, it goes out the other. All you have to do is track it,
Trap it just
take
a
it in
little
one
bit.
hand, put it in your bank, take it out and do what you got to do. But as long as you got a plan to pay off your debts, and as long as you're making more than what you spend, that's the key. If you can't make more than what
living
you
below
spend,
your means, living below your means.
I mean, you have to fix that. But if you can fix that, everything else will work almost automatic, and you will build an asset. I don't know how old you are, but try to add up how much money's come through your hands. Somebody say since they've been 20 years old.
Millions in my lifetime. Yeah.
Yeah.
Exactly. I'm pretty sure I spent $1 million trying to figure out how to quit drinking, just in a bar. I bet I spent $1 million in a bar. I'm not kidding you guys.
Man, I'm not quite that steep per se, but
oh boy,
I've definitely contributed my fair share. In fact, if there was a political event, I definitely would have been in that VIP room with the politician with the money I spent. No problem. Would have bought me and all my friends a seat at those tables. Easy peasy.
Well, like I like to tell everybody, I got my doctorate degree in drinking. So I've graduated. That's as high as I could get. And I understand drinking, and I figured it all out. And I said, well, okay, now that I'm done, I'm just going to go on and use my expertise of all the bar room lessons that I learned, and I'm going to live my life without it.
That's right.
There's professionals, and then there's amateurs.
That's Yep. That was me. But I don't know how we got onto that, but
Atlantic live. Go ahead.
Canadians have restrictions compared to Americans. Not really. JV, you can answer this probably better than we can, but I don't believe
it's very similar. Oh, I love Jason Lowe out there. Up there, it's JAYSON Lowe, LOWE. Oh, I love his group. I love he has built a bank. I'm talking about a family bank where I believe there's 32 lives insured. It's 70 something policies, I believe. I think the death benefit on all the total family. Last I heard, it keeps growing. I think it was like 33 million or something like that. And but he'll talk you through what he's doing, but their family gets together and goes down, to a beach somewhere, Cancun or somewhere, and they all sit down, the little ones and the older ones. They talk about how much money's in the bank. They talk about who needs money, who's getting married, who's needs a house, and they borrow from their self and they pay the family back. And that's just the way. That's the way to do it. They're teaching their kid when they want an Xbox, son, this is how you do it. You borrow the money. We have our own bank. Here's a contract, and their money that they get from cutting grass, they make payments back on that Xbox. So they learn at a very young age. Now, those kids are now, I think they're 19, maybe 18, 19 years old. There's two of them. I think they're cousins. But I love listening to them two talk because that's the next generation. They've been taught this since they were 8 or 9 years old. Jason's been doing this for 15 years or so. It's amazing what the young can pick up when you get the stuff out of the
That's
way
right.
where they're not
Right.
impression.
Yeah. I know their death benefit is different as well, right? It's like 100 years it stops
Their
at
life
or something like
expectancy,
that.
the life
Yeah,
expectancy
life
scale.
expectancy.
Yeah.
Yeah, it's
Yeah.
Yeah, the
different.
payout
99,
where I was saying
99
that the
or
cash
100.
value equals here 121, there it equals at 100. But
100.
when you think
Yeah.
about that, the closer you get to 100, theirs is jumping a lot more than ours here. Because
That makes sense.
Yeah.
we have time to
Yeah.
make it to
The
121
efficiency of
as
growth.
far as
Yeah. The
as far as
efficiency
the
of
income.
growth. Hmm.
Yeah.
But
Yeah.
uh, if it actually pays out, that might be a taxable event. I'm not sure. I hadn't really. I'm not in Canada, so I didn't have to. I'm not
Yeah.
prepared for someone to make it to 121. But really, we all should be making it to 121. I think it's what we're eating, these poisons and stuff. I mean,
Mhm.
I just like to say, take care of yourself. Watch what you put in your body. I'm just going to throw that out there. Those that are late on trying to get something like this set up, take care of yourself. You still got 40. You may have 40, 50 years, enough to compound. That's what I was more mad about. Why didn't somebody show me this when I was 20 years old?
I'll tell you. I'll tell you a neat little conversation I had just the other night with a couple, and I looked at them both and I said, "Well, there's no way they're older than I am." And they were guests on the boat that I was running, and I was like, "Holy smokes, what are your folks doing?" Because I know their daughter, and they said, "Oh, they're part of this foundation." And I said, "Oh, okay, well, what is exactly they do?" And she's, "Oh, they're in health and aging." And I said, "Oh, well, that's interesting. I can't wait to talk to your dad about that." And she goes, Dad, come over here, So he and I sat there, and he said, "We do it all now with AI." Okay. But he said, this is what he says: if you can live 5 more years, you get to determine how long you live. That's for his group. That's high level stuff. I don't know what price tag is on all that. I don't know any of that, but that's what he told me, and he meant it. And I was like, I looked at him, and I could not. He was 5 years older than I am, and he looked 5 years younger than I am. And I was just asking him, what was it? Diet? Was it health? Was it mental? Was it what?
Right.
And it's all the above. It's all the above. But yeah, it's good advice. Take care of yourselves, because we got a lot to live for, guys.
Absolutely.
And not only that, XRP's taking its sweet time, so we got to keep living here.
Man, never mind. Never mind.
Never mind.
I was about to say something, but I don't need the army on my butt saying don't be negative.
I just said it was taking its time. I didn't say it was a bad thing.
Go ahead, take more time, please take more. I'm good with XRP. If you want to stay at 60 cents for the next 5 years, I would greatly appreciate it. You go right ahead, so I can accumulate.
Hey, can we ask for another discount round? Maybe back down to 30 cents for another year or so.
I'm okay with that. Let's go.
Y'all don't be mad at me, please. I just had to throw that out.
Yeah, I've got to show you guys this one, because this is our man OG. This brother right here is, I just want to tell you who this kid is.
Mm-hmm.
And I call it kid not in disrespect. Okay. He's one of the brilliant minds of the future of our planet. He is technologically on top of what is going on, not only just with AI, but with crypto and a bunch of other things. And he's got 2 young kids, a young father, and he is a pleasure to speak with on the phone. I've spoken to him, and I know Brent has a couple times too. The thing about him is he has 2 kids. And it's like, you can find 5 reasons not to start a policy like this, but none of them are valid. None of them. Okay. You start this policy, and then you buy the kid's shoes with it. It's that simple. It's what's important to you. And when you get it, like you just claimed the light bulb just went off. Okay, we get it. But when you go through the practice of opening this thing up, just a small deal, everybody, just like XRP, everybody that told you when you bought it, you're an idiot. Most people are going to tell, what are you doing with life insurance at 24 years old? Are you out of your tree? You don't need life insurance. What's the matter with you? Right? But when you get what you get now, what you're starting to get, because you've been paying attention, reading all those economy books, you're already there. When you get what we understand, you're going to look back and say, even in your short lifetime, wow, if I'd started this 5 years ago, where would I be now?
Right?
It's so frustrating. It is. Yeah. Where would I be now?
Yeah,
and you
shut it off. Woulda. Yeah,
crazy.
Yeah, you can't shut it off either. Once you know it, you can't unsee it. Once you see it, you can't unsee it. Nelson would say, if you know what's going on, you'll know what to do. So do you know what the banks are doing to you? Do you know what the governments are doing to you? Do you know what's going on? You know, well, if you don't, we'll start there, study it. And OG, I say, man, grab all these books that they mentioned, but Becoming Your Own Banker. Read it 2 or 3, 4 times until you get it, and find you somebody that you can talk to. You know, I'm not saying jump out there and get you a policy. That is not what I'm saying at all. I will tell you that you need one, even though you may not know that you need one. But I am saying study, start learning things about money that you didn't know. You know, Alan made a good example when he was talking about $100 bill moving through town. He was talking about the velocity of money. You know, I've seen this one video one time. It's these 3 black guys that were sitting on a porch, and they were all sitting around the table. And you can find this on TikTok. But anyway, the guy in the middle pulls out a $10 bill and looks to the guy to his left, said, man, I owe you $20. Here's 10. I'll give you the rest of it later. But then this guy over on this side said, hey, before you put that money in your pocket, you owe me $20. So he handed it to him. But anyway, this $10 bill moves around the table twice and pays off all the debts and ends up going. Yeah, and ends up going. So it's when it moves. When money moves, there is a value exchange. And you could think of it as a town where somebody comes in and, you know, they have $100 bills. They spend it at the restaurant. Then it goes over to the, you know, the owner of the restaurant, you know, takes it over here to the movie theater. Well, that $100 bill can move around, you know, several for weeks. There's no telling how much value it generates as that moves. But if you create your own system like that.
Yeah, in your own example right there, the 3 men they just spent $100 with one $10 bill. And when that light bulb goes off, you're like, well, wait a minute. If I can keep my $10 bill and use it, but when I use it, it ends up in my account, but I got to use it. That's exactly
right. And the whole time you're capturing interest from all your debts. You're paying yourself back interest. You're forcing your arsenal to grow. You're forcing your vault to grow, just bigger and bigger.
Yeah.
I'd like to touch on something here on OG's situation. He's got 2 kids.
Yeah.
So, and JV, correct me if I'm wrong on this. OG or anybody else out there, if you have a young one, you can get a policy on that young one or young ones. Okay. Now, let's just say you did just that. You don't have a policy on yourself. It's on the young ones, right? Now, as time goes on and you continuously funding their policies over time, at some point in your life, what you can do is you can transfer ownership of that policy from you to your kids. And now they can continue to fund it. They can continue to borrow from it. And they can change the beneficiaries of those policies to their kids or their grandkids. And what you just did right there is passed on a vehicle that can produce generational wealth. Okay, size is irrelevant, but you passed it on, no tax, and that's a beautiful play that you could do. Am I right on that, JV?
Yeah, I like to talk about some pitfalls that's related to insurance companies that people may not know. Sometimes you have a hard time getting an insurance policy on a child of yours if you don't have a policy. In other words, it might be best to look at it as you put your mask on first before you put mask on others.
Gotcha.
That kind of thing. And they may only allow like half of your death benefit. So the goal is to get as much oxygen pumping in your mask, so you can create a bigger dynasty for them, something that they can, you go down there and say, hey, I want a life insurance on my kid. Well, if they're, young, they want to know, well, why, you don't have insurance on yourself. Are you planning on taking your child out?
The big question comes
that's just
up,
the
right?
way they look. That's just the way they look at it. They're looking at risk. They're looking at risk.
Right, exactly.
They don't like risk. So you want to build as big of a death benefit on yourself that you're going to use, because then that way that they will allow at least half of that usually
for your
kids. Now, if they're an adult kid, if they're over 21, they're going to be like, well, why aren't they getting the insurance on themselves? Well, if they're over 21, then they have to use their income to.
Right.
In other words, they won't let you have a premium that matches your yearly income. I mean, that's what I wish that's what I wish they'd let me do, but they're not going to do it. It's going to be like 25%. Well, 25% of your income is one thing, but 25% of your 21-year-old is a lot less. They may not be able to get quite as much, but something is better than nothing, getting started and getting out of debt and using those funds to build more assets, to create more income. Then when you go back to the insurance company, they say, oh, well, yeah, if something happens to you, look at all this income they're going to, I mean, that's how you grow.
Oh, that's right.
Gotcha.
I hope that helps. I was just trying to.
No, it does, man. No, that's great. Thank you for that.
I missed most of that, but that's okay. I'm sure everybody else got it.
You can watch the replay tomorrow.
That's right. Yeah. I'm sure it was wisdom. I know that much.
It was.
Here's one that I'm going to say that we should concern ourselves after you're out of debt. After you've used these policies to get yourself at least your high interest rate debt, or the really critical bills that you could tackle first. But again, that's going to be something you're going to be dealing with your agent with, and he's going to help you out. He's going to say, well, here's the benefits and here's the downside and here's the other things. But earning money with money is the sweetest part of this whole thing. And that's really, it's not my forte in life necessarily, but it is something that for some reason my whole life, opportunity has been rolled out right in front of me. Here's an opportunity. Here's an out. Here's one. Here's one. Here's one over here, Alan. Here's another one. Hey, do you want one? And almost all of them, I didn't have the cash to fund it.
Yep.
That's what's big about this, because all of us, one of my favorite stories, one of the best men I ever worked for, an old Texas man, I loved Mr. Hogan. And that man taught me this one key thing. And he said, Alan, the only difference between me and he's multi-billionaire. The only difference between me and all the other folks out there is that I had 4 kids. I had 10 grand. I had the 10 grand that I needed at the moment in time when it was going to work.
Yeah.
And I had it. And what happens is everybody says, honey, we're 9,000 ahead and let's put it down on a car. Or, look, the kids need you. We need a washer. The fridge went out. Well, let's just go ahead and get a fridge. And you never get the 10 grand. That's the most beautiful part about this whole thing. Every time I think about these policies, Dan Hogan just rings in my head every single time. There's the 10 grand. There's your 10 grand right there. Yep. Love it.
It's having that capital when you run across that deal. Basically what we were saying before, every time I've run across a deal in the past, I either didn't have the capital or it wasn't a deal, one or the other. But if you start storing up some capital and get ready, keep your powder dry, a deal is going to happen. We're going to go through another bear market. I mean, come on, we're going to have a cycle. When does smart money buy? The smart money buy at the top? No, they don't buy at the top.
No. And the smart money
ready.
The smart money has money in a bear market because they're smart money. And if you want to be smart money, you got to set yourself up to be liquid in the bear market. Yeah. Because the bear markets are easy. You know how many people I told to buy Bitcoin in 2020 when it was $5,000? And, they looked at me just like, are you kidding me? It's 2020 and the whole world's falling apart and everything's going to zero. Why would I buy something that's going to zero? I'm like crying. Now look at it.
Or the other side, I remember in 2017, it was, 2018, we were like, it was down at 3,200. I was like, man, we need to buy. Oh, well, wait, it's going to go lower. It's going to go lower. I'm like, it don't matter if it goes lower or not. I mean, you need to be buying. $3,200, I think it was. I look at it.
It was. I remember that. Yeah. Oak is definitely a genius. Oak has read the book and understands it. That's the difference. He gets it. Yeah, I love that. Anyway, I was reading a post here.
No, it's good.
Yeah. What do you guys think? What do you want to answer? A couple more of these questions? We got some really good questions in here. You guys up for some more? Or you guys got to go somewhere?
Sure.
No,
I
can stay all night. You know me.
Yeah. Okay. This one's interesting. Well, I've got 4 other questions myself, but this is a great statement, but it's the truth.
Yeah, I saw that.
Yeah, it's the truth.
Yeah.
There's a lot of wisdom right there.
That's true.
Yeah. I got some really complicated ones. I want to get clean here tonight.
What tier level are your questions, Alan?
I started off with tier 1s and tier 2s. Okay. Maybe we should explain. Okay, what's a good way to explain what I'm going to call the 4 tiers of IBC? I feel like I'm still in 1 because I haven't really put my money to work yet. A little bit. I have a little bit, but not to that degree. Would you say getting the policy is level 1, tier 1, or what would you guys call that?
I'd say that's a tier 2, to be quite honest.
Yeah.
Tier 1 is you're learning. You're learning the basics here. And I mean, you really have to have you got to have the tier 1 fundamentals, everything that we talked about tonight, answering these questions, conversations back and forth, man. That's really tier one. You're in the learning and being a sponge and changing your stinking thinking, doing all those things, because once you get that first contract, Alan, you've now crossed that threshold of, okay, I have now officially established my banking system. It is in play. I am in business now, right? I'm still building. When I say business, I'm talking from the perspective of Nelson Nash, saying we should be at least in two businesses: the one that brings in our cash flow every day that we normally do, and the banking business. And so that I'd say you got your policy. You're in tier two, because now you're gonna take everything that you've talked about in tier one, and now you're gonna tier two be about what you just learned about. You're actually gonna go through these motions.
Okay.
You're gonna kind of dip. It's part of the term. You're gonna dip your toe back into tier one subject matter, right? And you're gonna go, oh yeah, that's right. And come back over to tier two and apply that tier one general basic knowledge. Your first policy loan, definitely tier two, because there's moving parts,
Yeah. Well, then I guess I'm tier two already, because we've allocated some money already. Yeah. So that's almost tier. Well, it's bordered in between 2 and 3 almost at that point, really, when you allocated money. Paying it back, I guess, is 3, right?
Yeah, I would say, sure.
Okay.
If you want to talk of a function of tier 3, yeah, go ahead.
Yeah. Okay, that's kind of maybe over a bunch of people's heads. I don't know that we really kind of go over what all 3 of those are, but that's my next kind of question that you brought up. Great, thanks. So we have a crypto question here from Atlantic Living, which is kind of interesting, but we're all into crypto, so we can understand that one.
Just to be clear. What are people to leave crypto alone? Go ahead.
You'd be a good answer for this one, Simon. Yeah.
Okay, so when you're doing the AMA, I always say that, the AMM, okay, you're in the DeFi space, so you are taking your asset, crypto, and you are leaving it in a deal, and it is earning you a reward or a payout of sorts over time, and you get it depending on the frequency, how often you get the reward. Typically, it's within 24 hours. But yes, you're leaving that there on a DEX. You enter on the back end in a smart contract, but it's not in the traditional form of a contract. But that's how that generally works. So when you taking profit, you could actually you could take that reward and put it back over into your policy. And now you're getting those, get into fiat dollars and then fiat dollars into a policy. And now you're getting compounding, and it's locked in for all time till you graduate. Right. That is right. A play. But here's what I want. I want to really touch on this crypto part. Okay. So you're doing AMM. You've locked up your coins, and it's in a pool. You're getting a reward back. Okay. Now, unlike staking, most liquidity pools, you can pull out your whole principal when you want to, just like that. Okay. Yeah. So now you've got your principal back and whatever rewards you received before that day that you pulled your funds out. Okay. Now, there's another component to this analogy, or this situation rather, is you're getting you're back to you're getting your rewards every day, but now you have price action, right? And there might be some moments in that price action where your rewards is what you're liquidating in that price action, and you're going to have to be paying attention to that part too.
Yeah.
And move it over to your,
Yeah.
your account and get into your policy that way, thus still keeping an eye on your principal, what you originally collateralized. I'm totally doing this, by the way, not currently today in this moment, but I'm doing DeFi right now. And I'm using a very small portion of my principal crypto bag that I'm using for this, because I'm learning and I'm earning, and I arguably will not do anything over more than 5% of my bag, because risk.
Right.
At the moment, we know, if you've been in this crypto space, you can be on a decentralized exchange.
Risk in crypto.
Yeah, well, it's investing. Hello. when you do this, you're investing. You're allowing that decentralized exchange to utilize your crypto at that moment, right?
Yeah.
Providing liquidity. You provide liquidity. That means your money's out there, letting somebody else use it, and they do the deals, and then you get a little kickback. So that exchange could close for a day or a lifetime. And I'm just bringing that to light of like, why, Simon, would you only do no more than 5%? Or why are you doing so small, Simon? You're getting rewards. It's like, well, rewards are cool, but I'm cool with just
they are at risk.
But put it into it would be a play.
That's for our crypto show more. Let's get back into, I got one Money Paradise here, which is our brother Cody. He has a great question, and I'm just going to say this gentleman on the screen and you should probably get together.
Yes. Not this guy. That guy.
Yeah, that guy. Cody, this is Cody, Money Paradise. The answer to that one is this gentleman right here on the screen, JV, can help you out, and he can answer a lot of those questions to get rolling down the road on this thing. And you're a perfect candidate because I know you've studied this immensely over the last month or so. So I think look him up and get a hold of him. I don't know what I guess that's the link right down there, right? Is that the best way to get a hold of you?
Yeah,
you can just email. You can just email life@legacyvision.life, or Jarrett. That's my name, JARRETT @legacyvision.life. But what I like to do is create like give out my cell number. The regular phone number is on that side, but I like to chat back and forth or just send text back and forth. I don't know how people feel about that, but to create these conversations to where, you sort of decide when, I'm not out here pushing contracts on people. I'm not a life insurance agent. I try to specialize in setting up private bank contracts. That's what and help people get out of debt, that kind of stuff. So I'm all about teaching, learning, and I don't know everything. I learn a lot of stuff just from listening to other people. I'm not Nelson called it the arrival syndrome. I haven't arrived. I mean, I want to learn. I'm open sponge. So we just talk back and forth, and I got a group of people, out of Birmingham, with one insurance company. They're all, I'm part of the authorized practitioner program. I'm enrolled there, and I have these groups. So
I know that you're being very humble right now, but there's not an answer that you can't either answer or get the answer to for Cody.
Well, that would be true. If I didn't know, I know a guy.
Or a lady.
That's right. Yeah. Or a lady.
And I just want to say something to everybody here, since we are starting to talk business and numbers here. One of the things that I was most amazed about when I learned about IBC was how low the commissions are. These people who are selling these type of policies are here to help you become your own banker. If they were out to get into your wallet, they would sell you IULs or a term or other things that are far more lucrative, far more. Like, it's amazing the difference.
And
And when
Alan,
I
that's
really,
what got me interested. The first time I started, meeting people, is
Mhm.
every one of them, if they're a real authorized practitioner, they all are trying to really help people. And the
That's
way
right.
I see it, if I can help you get out of debt, get you a bank set up, and you're using it, and you get, your kids on it, you're tell your friends about it, and they all, even though I don't get paid a lot of commission because of the way they are structured, all of a sudden I got all these friends. They all have their own family private bank. I mean, I got a bank, you got a bank, we all got a bank. We can get together. Hey, there's a condo. We got this deal over here that we could do. We got this deal over there we could do. There's nothing stopping you from making a difference. And
Yeah.
now that's another thing. You know, are we going to make a difference in the world or not? Are we just going to take and not give?
That's right.
I have this little problem with churches where I feel like they're not, or a lot of churches, they're not really helping the women and children and the widows. I mean, that's a side note, but I'm just saying, if you're blessed with something, make a difference.
Yeah.
Leave room in your trust or in your plans to,
Yeah.
help others in some way. And I just feel
Mhm.
like if they can learn this, we can make a bigger difference over time. That's what Nelson wanted to do. He wanted 10% to know how to do this because he felt
Yeah.
like if 10% would
That's right.
finance their own stuff, that would be enough to spark it across America and cut this banking cord that we have, basically.
Yeah. Yeah.
But yeah, just reach out to me, send me an email. I love to talk about this. I'm not going to
Yeah.
be trying to sell you anything, but I'll talk about this as
Well,
much as you want to talk about it. You can ask Simon on that.
All
yeah,
day, every day.
I will tell you, there's another gentleman in here, Wayne Littlefield has just popped in here. He's another gentleman that I think he knows enough about money. He could probably teach a lot of what we're talking about here tonight. But those kind of clients are in this group, and they're people that know enough about sound money, and they understand the whole process, and they understand the banking system. They'd like to get out of it ASAP. And like we said earlier tonight, there are things that we would like to change in the world. But one of the big ones for me was when I figured what this whole thing out, I was like, why didn't I understand this back in the 90s when I was telling you about writing the checks to the
Right.
mortgage companies?
Right.
So these people like to get going on some of this stuff. So it's so great to have you here tonight, JV, because these people now can put a face to the man. And I know your heart is in this because you care about people. And I know that about you, and I've known that about you for over a year now, and we've talked a few times. And what I'm really learning, that's really opening my eyes more than anything else, is when you understand who R. Nelson Nash was, or in the people and the disciples of that group, if you will. It's amazing to me because they care about the 10% that you just mentioned becoming their own bank and changing their lives financially, and how that spreads like just fire around the face of the planet. Because there's so many YouTube channels, and mine included, that they point out all the problems in the world, and they explain how that the system's bad and the system's wrong, but they don't give you a lifeboat. Crypto is a lifeboat to some degree, but when you learn things like I've learned in the last 6 months about IBC, it's like, well, wait a minute, this is bigger. This is a big lifeboat. This thing is life-changing boat, if you will. and there's great people in this organization, and I want to link the people that appreciate my channel with people that care about the people that follow my channel. And if and as soon as I find out that one of you has done something wrong to one of my people, they just won't be around anymore. We don't play that. We don't sell IULs, and we're not doing any of that. What we're doing is helping people here become your own bank. And we started the night tonight with that. Was, what are we doing? First question I asked you tonight, JB, was, what are we doing with this thing? And you said, I'm getting a contract and I'm going to use it. It wasn't, I'm getting a death benefit and your kids are going to get rich. No. I'm going to get this. I'm going to get a contract and I'm going to use it like it's mine, like I own that bank. And that's what we're looking for here tonight. I love it. That's why I promote there's great people in this chat, and I wouldn't care if there's 2 of them in this chat. That's enough for me to do this show every week, because it's going to change so many people's lives. Yeah, absolutely. Yeah,
I love talking about this, and I mean, you're right, and I appreciate you guys having me on, Alan. Sure. You know, if you can, but if we can just change one, it can be worth it. You know, because there's no telling how many generations past them, where it could really make a difference.
Oh, yeah. And Cody's a great young man. He's got a great young family, and he's a really close friend of my son. And my son's going to be doing this here real shortly too. So, yeah.
Well, I love these young kids because they have a definite advantage, where us older ones are sort of behind the 8 ball. We're sort of running out of the time. You know, I'm not saying that we're all leaving tomorrow. I'm just saying that, man, if we would have started this when we were 20, but you know, would we have listened? Son, you need life insurance. Sure I do, Dad. Sure I do. I'm gonna live forever, Dad. I don't need to, you know. Well, it's because of the way they trained us, and we only think about the death benefit, and we understand how that's used, but there's a way to use this during life to finance everything that you plan to do from here on out. I mean, if I just could have kept and recycled the money from the cars that I bought over my lifetime.
Yeah, just the cars. Yeah, that's right.
I guarantee you, I'm buying another car probably before I'm out of here. Probably all of us is having to buy another car. Well, you know, I want to finance that myself, not go down here and chase these interest rates. You know, everybody wants to fuss about the interest rate, but I pay my bank back 10%. I don't care what they're, you know, it's building my stack, not their stack.
This is a question, not a question, it's a bit of a statement, but I just want to say that I actually used Vance, and I speak very highly for that man. Yeah, I found him to be honest. I found him to be a great teacher. He didn't resonate with everybody. He can be a bit, he's a busy man. And if you're just going to waste his time, don't bother with wasting the man's time. If you're serious about doing something, do it. If you say you're going to do something, and he asks you to do a little bit of homework, don't go back to I didn't get my homework done. I was too busy.
Mm-hmm.
That like a lot of people don't have the time for that. Holding your hand, waiting for you to become an adult and being responsible to becoming your own bank. But yeah, you should get started. And I don't have any, I have a little bit of connection to Vance, but I do recommend him if you're already with him. That you made a great choice.
Yeah, I had been studying for a while, and you know, you would hear about people talk about paying off their debt and that kind of thing. Vance was the first one that ever said, "Buy back your debt."
Yep.
It may sound like the same thing, but it's really not when you think about it. When you buy back your debt, you're creating a where your bank buys it back. Your bank is buying that asset instead of just paying off the debt. to me, paying off of that doesn't mean that you owe any money back to yourself. But I like the way Vance talked, because he was with Nelson back in the earlier days. Him and there's a couple other guys like that have the same basic rules. You know, Nelson sort of built on those rules in his book.
Yep.
But yeah.
Let's see. This question, this could take us all night. The one Hope just asked.
Yeah, good. Yeah, I'd like to get in the batter's box on this. Let me get in the batter's box on this one.
Yeah. Oh, I thought the whole question didn't show up, did it?
Yeah, I did.
Yeah, enough of it.
Yeah, we're good. Okay, I'll at least take the first part of the question here. Hypothetically, if the banks fail and the dollar devalued 50%, how would these policies be affected? Now, I can't speak to how is the policy on the earning side and the compounding being affected, but history has shown that these policies earn and still pay dividends. Haven't missed a payment in 150 to 200 years. But let's talk about how it might affect you, the policy holder. You're in dollars. You're going to have to use your dollars. It's still there for you to use how you see fit. So from that perspective, if the dollar devalued today and it went in the pooper, sorry, we live in the U.S. That's what's there. That's what we use. If we decided to use something else as our means of exchange, then that means all contracts out there would inevitably have to go along with the new currency or the new money, and you would still not be missing a beat there. It would still keep on rolling. That's my thoughts on that. Good or bad, I'm still rocking. I really am. It's just what am I able to do with now my dollar it's lost 50% of its purchasing power. Well, hey, great. That kind of really sucks for everybody, but my asset is still compounding. I'm still compounding, right? It's still there, still going by contract. Yeah. So,
I have
that's my thoughts on that part.
Yeah, it's a good, I'm going to go the same route. I lived in Mexico when the peso dropped, when they dropped to zero. And I'll never forget, everybody and their brother just panicked. It was like somebody kicked the chicken coop, people just cackling all around about what the mess it was. It's just math, guys. They devalued it 50%. That means your debt devalued. That means everything devalued, right? The tide went out halfway is the way to look at that. We're all still in the boat. We're all still floating on the water. Yeah. And it's really, it gets, let me just talk about fear porn for a minute. Like we all are commerce. That you and I, okay? Or what I like to call bear porn. It's like it's so to me, I understand everybody loves fear. They just do. And I get it, and it sells and it gets clicks. Oh my God. If I went down the fear angle, I'd get more clicks. I'd have twice as many subscribers. But then what
you
I
probably
have to
would.
I would, definitely. But what would I have to talk about all day? Stuff that I don't believe in. And I'm not going there because, again, let's think and grow rich, shall we? This is not about what could go wrong. Oh my God. You know what it reminds me of? It reminds me of there's a big giant gaping hole in the boat and everybody's standing around talking about the hole in the boat. As a captain, that's my analogy. That's what it sounds like to me. Let's talk about the damn hole. But here's how crazy it is. They're talking about it and the hole isn't even there yet. That's how crazy that is. And I'm like, I get it. Prepare yourself. I know. trust me, I live out here on a ranch and I'm off grid, and I got a couple of ducks lined up, of course. But if you live in that, you create that, is the way I look at it. But it's a great question. I'm not trying to bag on you, because you're a very intelligent guy, and I really love your questions. I'm going to answer it with this in closing. It's not going to change anything. These things are hundreds of years old. They're not going anywhere. Banking isn't going anywhere. If banking goes away, guys, okay, completely goes away, you don't want to live in that world. That is not a good world. It's a pretty good world if you got a stack of gold, you're 6'4", you're 25 years old, and you have an army behind you. Other than that, it's not a good world to live in. Like, that's not the place you want to be. So we're not going there. Yep. That's my rant. I was going to give a quick answer to that, but I would go ahead and just give it my whole both barrels. You're not going to touch that one after that, are you, JB?
Well, it's sort of hard to do it justice after what you just did. But I would say, in a lot of ways, hasn't our dollar already fallen? I think it's worth 3 cents, I believe, is the last I heard.
That's a good point.
From what it started with. So devalued at 50%, I would assume that they're saying 50% more from where it is now. But the way I view it is from an abundancy kind of side. Once you get this mindset, sort of like what the boss is talking about there, is if you can create capital, create assets, a ranch, a farm, start getting some things, they don't necessarily have to be like real estate in the sense of just making money. It could be off grid type situations, solar, that kind of thing. I don't know how people feel about that, but if I was thinking it was, the world was about to end, we're about to go off the rails, I'd want a bunch of chickens, and I think that's what I want. But you can't do anything without capital. It just seems like if you don't have capital, then you have to use your back. You can build a cabin, you can build something out in the woods, off grid or whatever, but it sure is a whole lot easier with capital to get the things set up that you want set up in your life for your family. Protect, there's nothing to stop you from, creating a bank, then taking money out of that bank to buy some silver, buy some crypto, buy what I would call investments. If things get too bad, they ain't going to take your silver. It all depends on what level of badness we're talking about. If it's real bad, you better have a hog if you want to get a chicken. Because they don't,
Right.
So it just depends on levels, and I hate talking about that, thinking that way. I really think the mask that's on everybody with the way things are, once you start seeing a clearer picture, you get a clearer path, you see how you can help people, your family, and that just keeps building and keeps going. Well, let's go.
That's right.
Let's go. Let's change the world. Let's change our families. Let's change the whole ball game.
We will. Yeah. No, that's it. Yeah. And it's so it's amazing to me that I keep hearing people that have been in crypto a long time, telling me, oh yeah, we need laws and rules and regulations and all that stuff. And I just keep thinking to myself, isn't that exactly why we didn't? Isn't that why we created crypto? I mean, didn't we do this so we could all transact with each other without the middleman? But it's frustrating at times because we're all at different places at different moments of every day, right? We really are. Yeah. So sorry, Oak, I didn't mean to blow you out of the water there, buddy. But it's all good. It's
It's a good
something to
question.
be considered.
It's a fair question. You know, that just
Very good
shows.
question.
You know that Oak's question right there just shows how aware he is of the current climate that we're in. You know.
Yep. Yeah.
Great question.
But the other side of that, I think the banks will go before the insurance companies go.
Absolutely,
Long
banks
before.
fall.
You know, if I think about it that way, you know, the insurance companies that were here before, all the banks, Federal Reserve, and all that stuff got set up. That's why they get the tax code, the tax breaks that they get. I think they'll be long standing after the banks are gone. How you get your money, they'll probably mail you a check. I don't know exactly how that part would work if all the banks are gone. But
CBDCs.
Yeah.
Yeah. That's probably it.
Oh, I hope not. Who knows? Who knows?
Well, you know what, guys? We've been going at this quite a while tonight. Man, I could talk to you two all night long.
Build a fire, we'll show up.
Yeah. What a great, that was a good question to end it on, actually. That was really good, Oak. Love it. Well,
yeah, I had a great time.
Thanks for coming, JV. We appreciate it. I gather you're going to probably be a regular on this show, and I'd love to have that happen more often than not.
Anytime y'all want to talk, I mean, especially IBC related, you just hit me up. It's like one of my favorite subjects, you know.
Well, 7 a.m. to 9 a.m. West Coast is like a really good time to talk to him.
Yeah.
Okay. Good.
Yeah.
So we're going to try and end it up here, and what we'll do is we're going to see everybody next Tuesday night. Tuesday night's our night. This guy screwed that schedule up, but it was good that everybody was here tonight. We had quite a crowd, and I think some brilliant questions by everybody. So any closing thoughts for us tonight here, Simon, or what do you got?
I'd like to make one announcement about next week. We have Scott Champman, also an IBC practitioner. He'll be on the show, just like Mr. Jarrett Vick was. So he'll be on next week, next Tuesday. It'll be excited to speak with him as well. Been 14 years in the infinite banking concept scene, and is a authorized practitioner as well. Also, you know, if you want to shoot the breeze with Jarrett Vick, check him out. Legacyvision.life. Check him out.
Right.
You know, call him. He'll hit you back. I'd love to chat with you. And then there was one. Are we going to talk about the Holy Grail place we're going to, Alan?
Birmingham, Alabama.
That's where we're going, right? Be on the
where
lookout, ladies and gentlemen. Alan and I are going to be heading down to Birmingham to go speak with Mr. David Stern there at the Nelson Nash Institute, and some other longtime IBC practitioners, as well as a insurance company, or a firm that works with one of the insurance companies that Nelson Nash has worked with in this history. So yeah, man, I look for. Oh my gosh, there's kind of dream come true. This is so cool.
And Dave is actually in a lot of the videos, and we should actually mention that he has a YouTube channel as well, right? That he does Nelson's videos out on.
Yeah, the Nelson Nash Institute on YouTube. Yeah, check that out. That's a good listen, a good read, a good 20-minute videos there.
And Dave is actually the son-in-law, correct? Of Nelson.
Yeah, Nash. David Stern. Yeah, he is the son-in-law. Yep. I think we get to.
Yeah. Okay, guys. Everybody have a great weekend. Thanks again, Luke, GA. We had Oak in the house all night. We had OG. Gosh, who else did we have? We had all kinds of people in here tonight. Thanks for coming.
Yeah, Wayne, OG, Greg. Greg. You know,
Cody,
RK Atwood.
Thanks for everybody tuning in. I really appreciate it. And we're going to try and get out of here. Thanks, guys, for coming.